George Alexander Muthoot, Managing Director of Muthoot Finance. Listen in.
Very strong set of numbers coming in, gold prices also going up. What led to this good up move in Q3, and will this sustain in Q4 also?
I think, yes, thank you and good morning. Yes, it was driven mainly by the demand for gold loans. People are increasingly resorting to gold loans as a means of finance. That's what we see in the last 4 or 5 quarters. So the last 4 or 5 quarters has been good. And to answer your question directly, the quarter 4 also is looking quite good.
That's a very short and a sweet answer, George sir. But one query on the gold prices as well. It's continuing to go near the record high levels, but now some volatility is coming in. It is near that, that $5,000 per mark, and it's slightly below that. And if there is a stability coming in and that safe haven demand, a little bit appeal comes off, the gold prices come down, then what happens to your model, and anything which you have factored in for the fourth quarter for that?
Yeah, I think the gold price is even now, even at $5,000, etc., it is still very elevated. If you look the last 1 year, the price has gone up by 80%. So probably there is a lot of headroom there. Again, as I said earlier, this is not the gold price which is creating the demand. It is the demand for funding or the need for funding which is creating the demand. The gold price probably will create a demand for sale of gold. But sale of gold means sale of gold ornaments. But these are people who are pledging their ornaments, thinking that they can take it back or being sure that they can take it back after a while. So the gold price is not the factor. Of course, the advantage with gold price is that you can get more money on the same gold. But notwithstanding that, the demand, the growth is fueled by the demand for funding and the non-availability of easy unsecured loans are not easy to come by. So people are increasingly resorting to gold loans. So gold price, even if there is a fluctuation, it wouldn't matter.
That's a very interesting take on the industry as well as your company. But George sir, I was just looking at the standalone AUM. It looks good, around 51% up year-on-year basis, but the street feels it's a slight miss in the estimates, and a couple of reasons for that. There is a lower LTV, the loan to value ratio, and a sequential dip in the tonnage also. Will these two impact that AUM growth in Q4 also, because this trend might continue going ahead?
No, there is no trend there. The gold loan, the business has been growing very well. So in the last quarter, in the first 3 quarters, we've already grown by 36%, which is much above the last year's 32% or 33% which we grew last year. So it's already beaten last year. There's one more quarter to go, and we see good demand coming there. Now about your tonnage. See, our income is only on the amount we have lent. The tonnage doesn't give us any income. So, but that's a simple economic question, the financial question there. But then, having said that, the tonnage is also coming down because the gold price is going up. See, imagine somebody had wanted 2 lakhs of rupees 6 months back. He would have had to give maybe say 200 grams of gold or something like that. But today, with the gold price rate, for the same loan, he need to give only half the gold quantity. So the churn in the gold loan portfolio is about every 3 months, every 3 to 4 months, the whole portfolio churns. So the new customers bring in only lesser quantity of gold because they need not bring the whole. Somebody coming with 4 chains earlier need to bring only 3 chains now. So I can't ask him you bring all the 4 chains because even with the 3 chains, he can get the same loan.
Right.
So that is why the tonnage is going down, because as the price goes up, the tonnage has to come down.
Okay, so that's the inverse correlation explained
Yeah,
mathematically. Correct for that. But the core NIMs, there was a sequential drop coming in. Operating expenses with AUM and the credit cost, they have surprised positively. Your view on that?
See, the credit cost actually it is mainly because of the the personal loan business which we started. So personal loan business has a credit cost. Unlike gold loan, which has no credit cost, the personal loan business has a credit cost. The the credit cost bump you see is mainly because of the aggressive write-off in the personal loan. What if we have a very small personal loan portfolio or unsecured loan portfolio about 3,000 crores. So on that 3,000 crores, there is always some aggressive write-off. But of course, we recover the money later. So as a policy, we would like to write off the loans or maybe derecognize the profit and write off the loan. So the write-offs you see are in the personal loan portfolio.
And are they continuing in the fourth quarter also, George sir?
See, the personal loan portfolio is only 3% of our total portfolio.
Okay.
It's just
Not
it's
a
too
major
insignificant.
Right. And there was a little bit of ease of branch expansion norms also. And what will be your strategy, especially in the non-south regions, how you're expanding? If you could just give us that entire picture of that.
Yeah, I think we usually open about 100 to 150 branches. But for that, we need to get the Reserve Bank's prior permission because there are about 4 companies which are having more than 1,000 branches. So the moment you cross 1,000 branch threshold, you need to get prior permission from the regulator for opening a branch. People with less than 1,000 branches need not go for prior permission. So we had been telling the regulator that it is unfair that asking only the big players to ask prior permission and the small players not to. So now I think the Reserve Bank has understood that, and in the new draft regulations, they have removed this clause that even we, the big companies with more than 1,000, need not go for a prior permission. So it eases to some extent, not that because the prior permission is not required, we are going to start 1,000 branches. No, usually we start 100, 150 branches. Probably we'll start a little more, or maybe 200, 250 branches. That's all that is going to. But the most important message I would like to say about this is what the thinking, the comfort which the regulator and the finance ministry is having on the gold loan sector. See, gold loan sector, I feel that they would like it to grow. And these are some of the ease of doing business they are giving for gold loan sector to go. And also the comfort which they're having with the bigger players. It shows the comfort, the confidence of the regulator in the bigger players by removing this prior permission. So this is definitely a very good step, a very good indication of what the thinking is there. But we have seen the portfolio of the gold loan going up very well, not only for the NBFCs, even for the banks. Today, banks have a portfolio of more than 13 lakh crore, and NBFCs have a portfolio of only 3 lakh crore. Both are growing. Last full year, we have grown by 36%. So in the 3 quarters. So it shows that there is room for banks, there is room for NBFCs also.
Yes. George sir, one more query is there, and this query is not regarding the company, it's regarding the industry, the gold financing industry. You are a stalwart of that. AI has come and everybody's talking about it. Bajaj Finance spoke about how they are using AI. How much is relevant AI for your company, and anything has started on that front?
AI is good for locating a customer, for lead generation. Good. But finally, the gold has to physically come to the branch. So we can't wish away. That is one of the reasons if the gold business has to grow, the branch has to be opened. That is something which we articulated to the regulator. That is why they have removed the prior permission for branch opening. So this is a physical touch and feel business. The gold has to physically come to the branch. The AI can be used for disbursing the money, for collecting some money, but for really the gold to come, it has to physically travel and come to the branch. When somebody takes it back, he has to physically come to the branch to take it. AI, I think, as a first cut or first thought which comes to me would be AI can help in customer identifications, etc.
All right. So customer identification, AI will be used when it comes to gold financing companies. But remember, it's always touch and feel. And that's pretty much important as well.